Well, hello, one and all. Thank you for joining us for this edition of the Human Potential Channel, a show where I bring guests with varied backgrounds to share with you, the audience, how they got to where they are, how they think, and how they can deal with a rapidly changing world where what seemed to work last year doesn't work this year. My guest today has a broker-dealer's license. His name is Jake Saba. And Jake, why don't you introduce yourself, and we'll just kind of have this be like a little coffee hour where we talk between ourselves, and hopefully our audience can pick up some insights into the kind of thinking that has led to your success.
Sure. Thanks, Dave. Happy to be here and hello, everyone. So, I'll kind of start at the beginning, and which helps show the evolution of my journey in the financial services industry. Right out of college, I majored in economics. Out of college, I started working for Merrill Lynch. Back in the late 90s, pre-tech bubble, everyone that was around back then can remember you could pretty much throw a dart at a tech stock and almost double your money in 1 year. So that was the environment I came into at 23 years old, essentially attempting to gain clients utilizing Merrill Lynch's research and buying and selling stocks and covered calls. So I cut my teeth primarily buying blue chip stocks and writing calls, so selling a call option against that to gain income. And like I said, I relied heavily on giving 30-day trials of Merrill Lynch research, which was coveted back in the 90s.
And there really wasn't much research readily available to the general population.
Right. It wasn't like nowadays where you just Google something and have 30 different there's Seeking Alpha that a lot of people utilize for analysts, and some of it's just people writing their opinion. But Zach's research, there's all kinds, just Morningstar. There's publicly available information today that dwarfs what was available in the 90s. And, there wasn't really online trading available for retail investors in the 90s when I started. Now that when I was just getting going, their fee-based advisory, it was actually fee-based broker dealer services. You weren't a fiduciary yet, but instead of paying $300 or $400 to make a trade, that's what it was when I first started. Now you can get it for free on Schwab, and a few years ago it was $9. But people usually had to utilize a large broker dealer to gain access to securities, stocks, bonds, mutual funds, without going direct to one of the mutual fund companies. And it was expensive, and he paid for the transaction and sometimes advice, but mostly the transaction or access. So that's how I started, but it quickly evolved from the late 90s to the early 2000s into fee-based advisor, where instead of paying $300-400 a trade, maybe you were paying a minimum $1,500 a year. So you can see where you only make 4 or 5 trades and you cover your costs. There were people even with $25,000 paying the $1,500 a year, but usually we were seeking high net worth individuals that would bring in 500,000, $1 million, which back then is probably a couple million now. So when I started, I was buying stocks and selling covered calls for executives at the companies in the Twin Cities, Minnesota area. After Merrill Lynch, I took a little hiatus from the financial services industry and actually went and I was recruited away by someone I was trying to get as a client as Merrill Lynch. He had several businesses and he bought this metal fabrication company. This is quite a tangent, but it's an interesting story. For a year or two, he was asking me to come work for him. I'm like, well, I'm not going to come work for you, but I'll start an ancillary business and work with you. So in 3-4 years after I started at Merrill, I left the industry to form a manufacturer's rep. And our goal was to sell enclosed trailers, covered trailers, to dealers, and what eventually became, it took about 9 months, but I got into Lowe's Home Improvement. We started with, I think it was
covered trailers like
stores.
That are pulled behind semis?
No, like contractors, like construction, like 6x12, 5x8, 6x12, and there were 3 SKUs. So those enclosed trailers, we also did open trailers, but They can be used for either heavy equipment or, contractors or painters or motorcycle enthusiasts. We built motorcycle trailers. So it was an enclosed trailer manufacturer that evolved out of a metal tube bending fabrication facility. So they're like, what are we going to do with all this equipment? And he's like, let's build trailers. So, like I said, fast forward 9 months, and I was pretty young at this time. I didn't know what I didn't know. Just somehow found a buyer at Lowe's and pounded them for months. And I love this story. This company was doing nothing, right? It was 9 months old essentially. And Lowe's came to visit, and we had to make it look like we were pumping out truckloads of trailers every day. So we built an inventory of about 100 trailers and had trucks coming to load them. And you could get 5 or 6 trailers of our trailers on a loading trailer. And we had them come pick them up and go drive away somewhere for an hour or two and then come back. And we didn't have to, because we started hiring more people back then, but we almost put ads to hire like actor workers. But we had to look bigger than we were. And we could do it. We could build. We
You
just
created
didn't have the
a trailer
orders.
Hollywood set.
Yeah, but it ended up working. Not just that day, but just the communication back and forth. And one of the things the buyer told me is like, one of the reasons you got this contract is because I would get emails from you at 1 and 2 in the morning answering the questions that I had sent. And so, plus cost helped too. And we're in rural Tennessee. I lived in Knoxville. So I moved from Minneapolis to Knoxville to drive 26 miles north to a town of probably 2,500 people where the manufacturing facility was. And that was, I didn't expect to talk about this today, but I just, thinking back in time as the progression, I ended up leaving the industry, coming back to work for UBS, like I did at Merrill. And then I got into wholesaling. So that was just a fun story
No,
about,
what is
I guess,
wholesaling?
riding grid.
What is wholesaling?
So even though I'm securities licensed, I do not have my individual clients. My clients, I'm essentially a institutional broker, let's call it, or wholesaler in our industry is a common term, but I represent asset managers on one side. So people that own and manage an ETF or a mutual fund or a separately managed account, once in a while a hedge fund or a private fund. And I represent them on one side, and I market to financial intermediaries, registered investment advisors, broker dealers, financial firms and financial advisors. Essentially, the financial advisors who have clients are my clients on one side, and on the other side, my clients are money managers. So I'm a middleman of financial products and services.
You find money from people that have it for the guys that manage it. Is that a kind of a way to go?
Yeah, except that I don't deal directly with like the high net worth individual, for example. I deal with the person that advises them so that it's a larger pooled investment. So my goal is to get an allocation. So say, Dave, you are a registered investment advisor, a financial advisor, or a financial advisor that owns their own firm, ideally, right? So you've been in the business 25, 30 years and you manage 300 million to $1 billion. Let's just say it's 500 million. You've been in the business 25 years. You have a staff, maybe you have a junior partner as a financial advisor. You're running your own practice and you manage $500 million of client money. Maybe you have 500 clients, right? That average $1 million each. Some might have 500,000, some might have 10 million, but you manage their portfolios. So hopefully you have models, right? You have maybe 5 models from conservative to aggressive and 3 in between. And you pick funds. Some will manage stocks, but usually most advisors will pick pooled vehicles. It's easier for diversification, right? So they pick ETFs and mutual funds in a model format for their clients, so that when they go to get a new client, they don't have to recreate the wheel. They're like, okay, you fall into, according to my conversation with you over time, you have a conservative risk tolerance, so I'm going to put you in my conservative model.
And in the conservative model, your expectations of gain is less, but the probability of loss is significantly reduced, maybe to none, depending upon what you're investing in.
Yeah, and it's probably even a little bit more granular in that you're looking at volatility versus just loss, right? Like it's correlated. So the more volatile, the more conservative a portfolio, which would the most conservative would be treasuries, or maybe even more conservative than treasuries would be some type of guaranteed income, like an insurance product, an annuity, or a CD, bank insured. So you have very conservative on one end to aggressive on the other. So the spectrum might be certificates of deposit and treasuries or money markets on one end, and the most aggressive might be like private equity, private companies that aren't liquid and that have a high risk of potentially not succeeding. Anyway, so I market to those registered investment advisors or financial advisors who have their own clients, to get them to allocate to my clients asset management, money management, or we have some ancillary products too. Like as I've been involved in wholesaling, right, since 2008, 14 of the 15 years independently. So my goal, I created a suite of products and services that I thought an independent advisor could and should utilize, because they don't have a home office like a UBS or a Merrill Lynch or Morgan Stanley. Now, I still market to some of those firms, but they have less needs, right? The home office takes care of a lot of their choices for them, and maybe limits their choices too. But the independents have a little bit more flexibility and leeway to do more sometimes, and maybe don't have the centralized advice, which is good and bad, right? They might not have the due diligence and research done by the home office, but they also aren't beholden to the home office recommendations, or you know, less than explicit, you should go here. So I've over 14 years have built a suite of products for the independent financial advisor, by on one side representing and gaining partnerships with money managers, lenders, research organizations, outsourced chief investment officers, so model creator themselves, and that's what I've been doing the last 14 years.
Now, over the course of this 14 years, the financial services business has changed radically, particularly probably in the last 5 years. So what are you doing? What are your processes to deal with change, manage your clients, maybe fear, uncertainty breeds fear, and retain your highest level clients rather than losing them in a market that could cause them to decide they need to look somewhere else, or pull their money back
Yeah,
into cash, or whatever they might do?
I would say that, in my business and what I do, that the biggest challenge is going up against the behemoths in the industry, right? Like, there has been a ton of consolidation. There's been uh, you know, just, I'll name the names, but BlackRock and Vanguard and State Street um, control the majority of the assets, the investable assets in the world, really, but primarily in the US. And we're talking trillions, right? So they, in the form of exchange traded funds and mutual funds and other vehicles, but mostly those two. So that has been the biggest change. And let's go back even further than 5 years. ETFs are a relatively new product, exchange traded funds. And for people who don't know what exchange traded funds are, it's a pool of investments, so that instead of, I'll just use stocks, for example. Let's say that instead of having to go out and buy all 500 stocks in the S&P 500 to basically own the market, you can buy an exchange traded fund that invests in all 500 of those stocks in one transaction for a very, very low cost. We're
And they
talking a
adjust
couple of basis points.
the weighting of stocks in their portfolio based on fluctuations and valuations within each of those stocks.
So that's a good point, and we could probably talk for hours on the different methodologies and how to weight things too. But usually, when you're buying an index, right, a passive index, and the S&P 500 is a passive index, that means you're just buying the market, and the S&P itself is cap weighted, market cap weighted. So, Apple, the biggest company in the world, is the largest percentage by market cap of the S&P 500, right? So it might be 7% of the S&P or something like that. So that there are pros and cons to passive investing, and I would personally, and I'm not recommending this to clients, right? Because I'm a client, and it totally depends on their um, timeline and their risk tolerance. But I like more thematic investments, more concentrated investments, because if you're in the market, if you're investing in the S&P 500, that's what you get. And it likely just reconstitutes. That means changes its allocations twice a year. And you're really right now, out of 500 companies, there's about 8 that are driving the entire performance, for good or for bad, because they're so big, and they compose so much of the index. There are funds that are not market cap weighted. Some are equally weighted. So if you have 100 positions, it's just 1% in each of those. Or if you have less or more, it's less or more percent.
So there's
There
theories
are other ways
behind
to weight.
there's theories behind each one of these models based on
Yes,
what someone believes to be true to match what someone wants to have as a tolerance for risk and reward in a portfolio.
true.
So not that any particular theory can be right all the time, they're just theories. So the idea is to adjust those to meet a need of investing in a very confusing world where stuff goes up and down and sideways and out of business, and what was yesterday isn't today, right?
Yeah, and then I would call that methodologies. And that's what I was going to talk about next. So as I kind of progress into your question about how things have evolved and changed over the past few years, obviously data science and alternative or artificial intelligence have made their way into the investing world, and it's inevitable to me that most portfolio managers in 5 years will be data scientists, or an AI algorithm, or heavily rely on data science and artificial intelligence algorithms. And I'm working with a couple of firms that are already utilizing that. So whether it's in an ETF itself, or a model delivery type service that's choosing your allocations based on factors, right? So we can get into that, but that is an area of interest for me. And it's just, as I've been in the industry, really the financial industry since 1998, 1999, the two biggest trends I've seen is the passive and ETF movement. Now ETFs aren't just passive, but that's kind of how they predominantly started investing in indices, and then people got more creative. One of the biggest advantages of the ETF is its tax advantages, because they can trade in kind. So even though you're buying and selling stocks or positions in that wrapper, in that ETF wrapper, you're not paying the taxes on those gains until you actually sell that ETF, which is a little different than other vehicles. And quote, I'm not a attorney or CPA, so that's not
Or
advice.
giving advice.
It's just one of the
Right.
one of the benefits of exchange traded funds. Usually they're lower cost. You can buy them like you buy a stock, just with one click, and there are tax advantages. So majority of money over the past 10, 15 years has been flowing into exchange traded funds away from mutual funds. Again, this is my business, but mutual funds used to be some of the only ways to access pooled investments, to have diversification at a lower cost. Well, mutual funds might average 1 to 1.5% embedded internal costs. Like that's how much it charges you every year, not to mention the advisory fee on top of that. ETFs are typically much less expensive for this same or more benefits.
And the reason
But
that's important is because of the effect of compounding over years. Although 1.5 doesn't sound like a lot, when it's 1.5 over 10 years, it makes a
yeah,
big difference what your gain is overall at the end.
yep, yep. And so as money has moved in the trillions from mutual funds to ETFs, there's still a lot of money in mutual funds, but the trend has been um, from here's how it's worked: from mutual funds, or from stocks and bonds, to mutual funds, to ETFs, and from indices or kind of just fixed strategies to more thematic strategies, more adaptive strategies. There are now actively managed ETFs, where they used to pretty much just be an index or a or a pretty strict methodology. Um, there's a lot more flexibility for asset managers in the ETF world, in how they create their methodologies and enact their methodologies. But now they're most of them are utilizing artificial intelligence and machine learning, and that trend that's the next trend to me. So ETFs and artificial intelligence is what I'm seeing, and let's just call it not necessarily institutional, but in the financial intermediary world, right? The firms that decide what's available to their advisors and the investors.
So it sounds like you just recently, are you at liberty to talk about the new opportunity that's come your way?
Yeah. So I will be accepting a job or a position, after being self-employed for 14, 15 years. My next role coming up here next month will be to oversee the growth and succession of a large financial firm of 110 financial advisors. They have both a broker-dealer side and an RIA, registered investment advisor side. So this firm caters to individual investors that utilize the financial advisors at this firm. And they've been around 30 years, but so there are a couple of facets to what my role will entail and what they need. But they're like most industries, there's this succession coming, right? Either people are retiring or working less, and somebody needs to take over for them, but also they should monetize or realize what they've built over the last 25, 30 years, be able to sell their business or sell their practice, but also those clients that they've been working with for 5, 10, 15, 25, 30 years, even though they're retired, they still need a financial advisor. So I'll be handling the succession of the advisors and the practices within this organization, but also the growth of the RIA platform to expand it for those advisors to grow their businesses, and hopefully to give more options and alternatives for those advisors to give to their clients, like alternative assets, which I was going to get into too. That's another trend we're seeing in the industry.
So
more available access to
let
alternatives
me
or
ask you
more
this.
investment options.
After 14 years as an entrepreneur, you're moving into an institutional role. How would you compare, as best as you can see it now, being new in this new role, the entrepreneur role to the institutional role? How do they compare?
Well, I believe the nice thing is that for those that are running their own practice, I can connect with them on that level. Be like, look, I've been there. I've been where I eat what I kill, or that the market influences your potential revenue in some ways. But I think that my mindset won't change a whole lot. It's just that I'll have more reports, right? Like I'll report to the CEO on one side, but also all the advisors that I'll be working with and coordinating with to hopefully improve their ability to work with their clients and grow their business. So I think growth is the mindset for both the role and for who I'm working with. I mean, advisors essentially will be my clients, right? Just like they are now. It won't change a whole lot, and that's why this move made sense. In that over the past 14 years, I've been trying to build access and access to financial products and services that maybe they didn't know about, but also with the intent that it'll expand their opportunity set. It'll give their clients more or access to more, or help them find things they maybe didn't know existed, because it's more boutique. And I use the word boutique. A lot of my clients were boutique, the asset managers. Boutique is just a nice word for small or new. But usually it's there's a more specific or targeted strategy to boutiques. They're not as cookie cutter or generic index composite type investment vehicles.
So it sounds like in both roles, you are a coach. There's a complex financial world out there, and you listen to your clients now and then, or what you're going to, and you'd see what advice would be useful to them, and then what resources you can offer them to help them accomplish what they've not yet been able to do exactly like they want because of their limited access to knowledge or information of what's really available that you know about that they don't yet. Is that a fair statement?
Yeah, yeah, and coach is one word. I mean, I think about it in terms of like consultative selling because I don't shy away from the fact that I'm selling something, right? Like,
Right.
um, yeah, I'm not a charity, and these people aren't either, but they're hopefully doing right by their client and themselves by expanding their options and their opportunity sets. But yes, and not everyone wants a coach too, right? Like they don't want it to be thought that they don't know what they don't know. So
Sure.
I think of myself as more of a consultant and bringing about awareness and opportunities that they maybe didn't know existed.
I got it. So if we look at, let's say, post COVID to pre COVID, uh, COVID, I think, brought so many things rapidly to the front that maybe would have taken another decade before we had to cope with them. What is it that you see now that post COVID we're having to live with, not only in the investment world, but in a way of thinking to see opportunity rather than just frustration and overwhelm and concern that you just don't know how you're going to succeed in today's world?
Sure. I mean, the biggest change I've seen in my world in what I do on a day-to-day basis, and I'll expand on this too broader, but is both advisors and clients. I mean, the whole work from home phenomenon, right? Or not just work from home, work from your cabin or work from vacation or work from wherever you want. Like, you could be on permanent vacation, but take meetings. Um, Being a little exaggerative there, but uh, also it probably expands the um, time frame or the life of someone's career, right? If you don't have to drive into an office every day or park in a parking complex or take an elevator to the 30th floor and walk skyways or concrete jungles, if you don't have to wear a suit every day and make that commute, it's a little easier. Now, for clients, it's easier too. The clients don't have to make that same trip and validate their parking and take the extra half hour commute each way. So hour meeting becomes a 2 hour time and just a little bit of an inconvenience. So it's more convenient with Zoom, just like we're doing right now. I didn't
Yeah.
have to fly to Houston for us to have this meeting. Um, Advisors and clients alike can have really good conversations. I mean, they can make a presentation in their conference room on their screen and have that owl video. I don't know if you've seen that, but you can see basically the whole conference room in a panoramic style. If you have a bunch of um, a team or experts in there all in one meeting, or the different screens on the Zoom. So it's allowed flexibility for meetings, obviously, and for a while, for 2 years, it felt like all I did was Zoom meetings. It I actually was busier during COVID than I was before and after because people were more apt to take a Zoom meeting than they were an in-person meeting. And I think that was the same for advisors and their clients. Clients now are used to and enjoy the Zoom meetings and getting educated from their couch. And giving their reviews on their couch. So I think it's elongated careers potentially, um, for good or for bad, and people are just used to this online communication. Now, I think for seasoned veterans, that's great. For kids, I think that poses problems not having as much in-person and social interaction and reading people's body language and just hanging out, being in the same room. Anyway, that's a little bit of a tangent. Uh, so what else happened during COVID? Yeah, I just think that the work from home phenomenon was the biggest thing. Changes in the investment industry. I don't know if COVID really changed the way things are done. I think the things that are happening would have happened anyway. The artificial intelligence, the movement to more theme-based methodologies, the consolidation and roll up. So a lot more money is in hands of fewer larger firms. That could be one negative. Consolidation happened a lot in in times of change, right? Like big companies buy little companies. We saw some of the banking issues that was more because of rising rates, addressing inflation from the printing of money during COVID, right? When money was created to address needed situations because maybe the wheels of commerce weren't spinning as fast as they should have been back then, that had ramifications. And the bank failures in the beginning of this year, like Silicon Valley Bank, that reverberated through the industry. I mean, any hiccup in the economy and and policy effects, all that stuff affects economics and affects the financial industry, if not immediately the perception of, well, let's just call it uncertainty. The markets hate uncertainty. So the more uncertainty there is, the more volatile the market's likely.
In volatilities, rise and fall of prices.
Yeah. Yeah, ups and downs, daily or weekly or monthly ups and
the
downs.
wider the change in the shorter amount of time, the more it's called more volatile.
Yeah.
Yep. So as we see artificial intelligence coming in, and what I hear you saying over the course of this conversation is the fee that clients have to pay for services has continued to shrink, in some cases to zero, in some cases maybe to 0.5%, 0.75% instead of a 2% and 2% and 20% of the earnings. Where can a person in your position build business that's profitable for you, for your company, as well as providing the most up-to-date service that your clients are needing, so everybody wins? There's nothing wrong with making profits. Our clients all want to make a profit. That's why they're investing, not to lose money. They don't want to invest to break even. Your company wants to help them invest so that everyone makes a profit. What service do you see that you can bring them specifically, them being your clients in a broader sense, so they're better off having met you, Jake, than they were before they met you specifically?
Yeah, I've given some thought to this, and I've seen a lot of different models for delivery of financial advice over the years, right? So here's how I see it. I think that, let's call it the next generation of advisors, will have to be more flexible in how they deliver their service and how they charge for it. So where it moved from 20, 30 years ago to just transactions, fee-based on a transaction, right? Buying and selling a security. Things have morphed into the fee-based advice. So charging 1% a year as a fiduciary, right? As an advisor that creates the models, meets with you, does a plan. And usually things are all wrapped in a fee. Sometimes they call it a wrap fee. So say it's went from transactional to fee-based. Now there are other models too, where maybe it's just hourly, because let's say you just need advice once, and you don't need someone to constantly monitor your holdings for a year, but you want a plan. So there are plan fee models or hourly models, kind of like an attorney. There are advisors that just charge hourly if they're doing like projects or project fees. This is one I really like, especially for younger investors. I have seen subscription models. So let's just say that you're 25 and kind of just going in your career, and really the only investment you have is your 401k and maybe $167 a month. No, it's more than that. Whatever, $5,500 is a year to your Roth, right? So you're investing in two things. So it's not overly complex. And in your 401k, you're choosing a couple of mutual funds that is predetermined for you. In most 401ks, you don't have a lot of options. Sometimes you can do self-directed, but that's a tangent too. And you have a Roth where it's at, could be at this financial advisor's place, or it could just be at Schwab, right? Like an online,
in a Roth, you put your money in
marketplace
after tax, and then the gains accumulate without being taxed, and then you pay a tax when you take them out, or you don't pay a tax when you take them out.
You pay no tax when you take it out. You're only taxed before when it goes in. So the gain, the accrual and the gains and taken out, no taxes, since you pay taxes on the beginning. But for younger people to have a long time frame, that make more sense. Now there's a trade-off too, right? Like if you're putting $1 into a traditional RIA or $1 into your 401k, a whole dollar is going in there. You're actually getting money deducted from your taxes, right? Whereas if you're investing in a Roth and you're in the 28% tax bracket, only 72 cents on the dollar you made is going into the Roth, but you're not taxed when it comes out. And hopefully you'll be in a higher tax bracket, all things considered, when you take it out. So let's just say you're that person where you just have really two small investment strategies and you're growing and it's maybe not justified. A lot of advisors nowadays have a minimum, right? Like you might have to have 250,000 or 500,000 or $1 million to be a client of theirs. Well, an advisor might be able to justify having 2 hours a year spent with this young person that's just getting going that will be a great client for them in 5 or 10 years, right? But this person wants some advice, just wants to bounce some ideas off an advisor. The advisor wants to make sure they are available to this person when they do become an affluent investor. So if you do something like I'll call it a gym membership, but it's a financial gym membership. Say an advisor charges $39.99 a month, right? So that's close to $500 a year. Most people that are seasoned probably expect to make about $250 an hour, right? If you kind of break it down, they're not being paid hourly, but their time is worth something. And if they're charging a fee on someone's assets, they can figure out what the time value of money for them based on those accounts are. But anyway, if you're a new investor and you're $39.99 a month is not a lot, right? It's less than a lot of things they spend money on. But let's just say you're allocated 2 hours a year. Maybe 1 hour of that is a sit down or Zoom meeting. The other hour could be like 4 15-minute calls or 4 texts back and forth, right? Like they got to evolve with the times. And the younger generation doesn't want to go meet with you for an hour. Maybe they will once a year for something complex or just to make sure you're still there. But most of them are just going like, hey, I got a $5,000 bonus. What should I do with it? I was thinking of putting it in this fund or creating a Roth or whatever. And the advisor for that 15 minutes to an hour or whatever could give them advice because they're subscribed to their model and everyone's happy. So I see like project planning fees, hourly fees for, certain projects, the fee-based model that already exists, and that subscription model. I think that subscription model will take hold for the younger generation. And so the advisors just have to be flexible and meet the clients where they're at.
And would you say that certain people are good at adjusting to change, certain people are not? And so if you, in any career, yours or any career, flexibility is a requirement of the future. Times are changing. We don't have to care for it, but we do need to adjust to it. So let me ask you this. You've shared a lot of complex information with our audience. Of course, as we want to make sure they know, this is not financial advice. This is strictly your opinion, your idea, things you've seen through the course of your life. It's for information, entertainment purposes. We advise anyone that's interested to dig deeper, maybe hire a financial advisor, maybe hire an attorney if their estate is at that level where it makes sense to do so. If you were going to give advice today to our audience and you were going to give them one thing, although there's many things someone can do, but one thing they could do today, right after this show is over, just as easy not to do it as to do it, that will have a profound impact on their life going forward, in your estimation, what would that be?
You mean financially speaking, like what we're talking about now, or just anything? I mean, I could think of several things, but
yeah, I think in a broader sense, like a life choice. See, financial choices are made by processing in your mind what you want to accomplish and what things you'll likely have to do to have a probability of your financial goals being met by that. But I was thinking in a broader sense, you've adjusted a lot over the course of time. I've known you with the experience we've shared and gone through, as well as it sounds like you're getting ready to make a profound change, at least in title in your career. But you just got through describing to me, although it's different, it's the same. And maybe there's a key in that, right? That it's different, but it's the same.
So that's a good point. Yeah, I mean, the reason I got that role is because of what I had been building, right? It was a natural progression. So if I hadn't done what I'd done for the last 3 years, I probably wouldn't got this role. Those 3 years that I spent building my own firm with a partner wouldn't have happened if I wasn't at another firm for 10 years prior to that in an independent capacity, but not with as much control. and that wouldn't have happened if I wouldn't have been at. So I guess what's worked for me is always having in mind that continual progression, right? Like what's next? I'm always thinking what's next in terms of um, not just career, but just interests, right? Like um, so if I were to give one piece of advice, it boils down to really reading, right? Like I read constantly, but I subscribe to all kinds of newsletters, and you don't have time in the day, and there is too much information out there. But select what you're interested in, because you can't be an expert in everything, but you can gain a lot of knowledge in something, whether it be artificial intelligence and data science, whether it be nutrition, um, you know, coaching, right? Like just influencing people or helping people. There are the thing, and I love the financial markets, right? Like it's been something I've been interested in since I was in college. I majored in economics. We didn't get to that part. So I majored in economics, and back in college, I thought I wanted to be a portfolio manager. Well, I probably didn't have back then the demeanor and the uh, just there's a lot more to the analysis of managing money than there is to explaining it and meeting with people, right? So I much more enjoyed the sales aspect, and I figured that out early because I met with did informational interviews and met with some of the portfolio managers, and that was a small sample size, but I guess what I would entail to my progression, right? My ability to adapt and progress. Because, the reason I became self employed in 2009, I was laid off during the credit crisis. Like I didn't plan that. And then I didn't plan probably to be self employed for 14 years. It just worked, right? I just kept figuring it out. And then 3 years ago, I didn't plan to then be employed, right? It's just adaptability has probably been my biggest strength. But the reason I've been so adaptable is just lifelong learning, continuing to read, subscribing to newsletters, understanding what's next, right? Like we haven't even got into some of the opportunities for individual investors. If our people are interested, they should look into. I think that another big wave is private investing, right? Investing in companies that aren't publicly traded. Now, there's higher risk to that, but it used to not even be available to anyone unless you had $1 million. There's a company called Start Engine, which evolved from something else, but it's basically a private investing platform. So I would look into that, like diversification. There's a lot of gurus out there on LinkedIn, and I see a lot of them that teach you how to run a business, whether it be buying a storage facility or flipping houses, or now it's online content providing where you're monetizing an Instagram page. I mean, who would have thought, right, that you could make money on people clicking on something you're basically
Who would have thought you could make money
borrowing?
playing video games? There's guys that make $1 million a year playing video games.
Yeah, and there are scholarships for it now. You can go to college, I guess, playing esports. Um, yeah, so that was a long answer, but I would say if I could recommend one thing, it's just keep learning, right? Because if you think that you know enough where you're at, could change. So you better know a little bit something else. So whether you're in a role or a job, learn as much as you can about that, but probably something else you're interested in. What could you do laterally? What could you move up to be? But also just personally, right? Like I that most of what I'm doing during the day, and unfortunately, is reading on my phone. So it's not like I'm playing games or be on social media. I'm constantly reading, mostly about financial markets or economics or policy or what's going on in the world. But it really boils down to um, my self-motivated interests of wanting to understand what's coming next in investing in the financial markets and economics. All that stuff interests me. And when I talk about this stuff, to me, it's just like having a normal conversation about the weather. And I understand that it's my wife used to think that I was speaking a different language. She's gotten used to some of my conversations, but I guess that just comes with time and experience, right? Someone could be talking about things that I have very little information or knowledge on, but like, I don't know, biotherapies. Although in selling funds has given me a broad array of knowledge, right? Like I've represented master limited partnerships or energy funds. I've represented biotech funds. I've represented private funds. So you learn a lot about segments of markets or industries when you have to sell something that invests in them. So that's been a benefit to me too, is when I've been selling some of these specific or thematic or strategic investments, I have to learn about them a little bit to at least sound like I know what I'm talking about, but I want to know what I'm talking about. So I want to understand what some of these therapeutics do, or what policies affect drilling when I was selling the MLP funds, or the what policies affect the ability to raise capital. And that's something you and I are dealing with
Yeah.
in
Yes,
a
indeed.
different part of our lives. But access to capital is about the most important thing for any business, right? Like if you don't have that, it's really hard to grow or survive, and that's getting harder right now, right? Like it's harder to work with banks. It's hard for banks to give out money, and that's somewhat intended, but um, there you got to be more creative and adaptable, as I was talking about, as a business owner, just like an investor or a person, and go out and find uh, those that uh, have access to capital, and that's really hard. So maybe
So
we
what
can
I
do
hear
that and
you
talk about
saying
that
is
another time.
never stop learning. That would be what
Yeah.
you would say. Never stop learning. Now, I had just was thinking about you and the times I've reached out to you over the last couple years we've known one another, and you weren't available or you couldn't talk very long, and I noticed why, because you were doing family time. That's something we didn't touch on the show today. From my limited experience with you as a person, I've noticed that you are dedicated to putting time into your family. And that's something we haven't talked about today, because no matter how much wealth you can gain, if you haven't dealt with the personal life, you'll end up with a lot of money and no happiness, right? So, how have you managed with a very demanding career? There's never enough time to learn, right? It could be endless. You could go days and days and still go days and days. How have you set your life up so you take time for your wife, who now understands some of what you talk about, and your children?
Yeah, I mean it's almost because of how involved my kids are, it's I just have to, right? Like their time books my time for me, right? Like they can't drive themselves. They're 11 and 8. They can't make all their decisions. I have to, like I've most of the time I've been coaching my son, and hopefully this winter I'll coach my daughter too. She's just a little younger. But I because my son has to be somewhere for football or baseball, um, I've most of the time volunteered to coach. So if I got to drive them there, plus I enjoy it. I've been coaching since I was um, in high school in some capacity, right? Sports. So one of my jobs in high school was to coach community t-ball to, I think when I was 17, or baseball, I was coaching like 5, 6, 7, 8 year olds and everything: baseball, floor hockey, football, wrestling. And now I do it with my son and his age kids. And I've been doing it since he was 5. So he's 11. This is my 7th year of coaching something: football, baseball. Those are the two main areas. And I might coach my daughter in basketball this winter. But anyway, it's we encourage our kids to try a lot of things in order to find out what they like. My son likes sports. My daughter's more into dance and theater and singing. I can't help as much there, but I can support it. But um, when there's already a scheduled practice time, I got to be there. So I can't do anything else. And then outside of that too, we don't want them. We want them to be well rounded. So it's not just about sports, but we'll take family trips or family drives, or even just go out to dinner um, to be together. And then same with, usually we try to have dinner at night, especially on the weekends. I mean, we're running all over the place now with practice. We don't really have much dinner time together, but when we can, when we're all at the same place, we always have dinner together. In the mornings, we're usually kind of scurrying around, getting ready for something, and we're together. But yeah, when they're either at school or when it's 8:30 to 4:30, I'm working. I have been blessed with the flexibility to sometimes be available to go pick them up or see them during the day, because I've mostly worked from home. That's going to change. I'm going to be in an office a lot, but the night I'm not going to work at night. I usually don't work at night. Now I will when they go to bed, answer emails or read, but when it's after school time to bedtime, most of that time I'm available. I can work after and before. So that's how I do it. It's starting to get a lot, with being on the baseball board, and we didn't talk about this too. I'm on the fire department, our local fire department, but a lot of that is nights and weekends too, and that's serving the community. So besides work, there are two other interests I have: is my family and being a part of the community I'm in, and volunteering for the fire department seemed like the best way for me to contribute to the local community.
So it sounds like you have built a balanced life for yourself. And in the time that I've known you, I've noticed something else about you. We've dealt with challenges in the deals that we share together. I think we both have a style of making a joke over to the absurd to kind of help blow it off. But I generally don't hear like an angry, sour attitude coming out of you. It's more like, yeah, this is really ridiculous, but not anger, maybe disappointment, maybe
Yeah,
frustration. But that's
yeah.
different than being angry about something.
Yeah, I mean that's one thing that I've learned, and I think it's by failure, right? You learn by failure. You learn by maybe being too rash or reacting too harshly in the past. But I only control what I can control. I only try to control what I control. For those things I can't control, I gotta. We talk about adaptability. You gotta adapt, figure it out, relax, do what you can do, and ask the people if you're working with someone and there just seem to be a hindrance. I ask them, hey, what can I do to help? If there's continually no feedback on what can I do to help, you got to get away from that person,
Yeah.
or deal or whatever. So yeah, it's I would say, and you're probably the same way, right? Like over time, you developed the ability to react better, hopefully, because you've had challenges, and the more challenges you have, the better you are at dealing with them. Not that you go into something hoping to face a bunch of challenges, but it's just reality.
In
I'm a
fact,
realist.
in challenges are opportunities.
Yeah,
If you lose track of your emotions and they run rampant, then you miss the learning opportunity. It turns into something that's debilitating. And I had an experience. I was at dinner with somebody and something really harsh happened to me. And I could have easily ruined the evening. I didn't like it. I recognized it happened. I said, hey, I need a minute. And I did what correspondence were necessary to set it on the side. And then I went back to having a pleasant evening. And there was a time when that would not have been me. That would have been it for the evening. It would have ruined for myself, the people that I was with, and who knows how going forward. But I've found that not only does it make me unhappy, it really makes the people around me unhappy, which then
yeah.
makes me more unhappy, right? It's
And,
just,
and reflects poorly on you too, right? For someone that probably had nothing to do with whatever caused your inconvenience.
yeah.
So then you're just compounding the inconvenience. So yeah, and it's, especially with young kids right now, I got to be, and once in a while I probably react poorly, right? Like get upset or say something or do something that I wish I wouldn't have, not to the extreme, but uh, when you're in front of kids, I think you learn to at least, you should at least learn to be a better example or to control yourself more, so that also helps you in dealing with adults. Because I'll admit, a lot of times I'm like a kid still too, and I think that's a good thing. I think that you always want to be curious, fun, energetic, open to new things, and to me that I think of kids are that way. But sometimes people say that to me. They're like, you're just like a big kid, um, and I hope not to ever lose that.
No, that keeps your mind open to possibilities regardless of disappointments. And I'd like to say this in closing to our audience. If you enjoyed this show, please give us a thumbs up. Please subscribe. We need your subscriptions to get other people to view. Send us guests. Give us your comments because we did this for you. We're exploring the way we think to share with you in hopes that it will improve the quality of your life. You'll share it with others and you'll grow this organization from the teeny little group it is now to something profound and large. So make sure you give us a thumbs up and make sure you subscribe and make sure you reach out to your friends. Now, Jake, would you like anyone in our audience, if they needed to be able to get a hold of you? Is that an appropriate thing?
Sure. Yeah. And by the way, I just want to, give you a plug or say that, I mean, you are really good at this, right? I think you two are open to new things, and it's so easy to talk to you. So, I mean, I'll encourage people, if they had a question from today, they can contact you too, or want to talk about anything, right? Like this open format podcast have kind of done this, right? Like that's what this is essentially, a podcast or a video interview. I mean, I think this is part of your future, right? You're good at asking questions. You're good at kind of moving to the next step. And this was fun. I mean, this is super enjoyable. Like you said, you and I have conversations like this quite often, maybe not this long. Um, but yeah, I would encourage someone to, if they want to have a conversation like this, to contact Dave. But to contact me, I'm just going to give my personal email, because some of my work stuff is pretty closed to the entities or the people that work with that company. But my personal email is jake.saba30@gmail.com.
Well, there you have it. Jake, thank you so much for your time. It's always a pleasure. I know we've got some things cooking that we're not at liberty to discuss right now, that in future episodes we will be talking about it. Thank you for taking your time. I love your attitude. I'm impressed with your social commitment to your community as well as to your children. I like the way you work intellectually. I like your spirit and your demeanor. And I appreciate you having taken the time to share that, not only with me, but with the audience. Thank you so
Of
very
course.
much.
Thank you. Yeah.
You bet.
Bye, everyone.